or not. I see that it says that I'm streaming, but we may not be actually recording on YouTube yet. Let's see what's happened here. Yeah. Okay. Kevin says, okay, now it is. Yeah, there it goes. Yeah, it kicked in. I don't know where it started. Okay. Kevin says, okay, now it is. All right. So here we go. Start your timers as of now. So U.S. dollar index forged to new highs earlier in the week, probably on anticipation of stronger econs, i.e., Fed's going to continue raising rates. Had I don't know whether manufacturing was this week or was the end of last week. I can't remember just off the top of my head. But manufacturing data came out recently, showing a bit weakness. Contraction. We had supply or services sector ISM came out. Didn't show contraction, so I think the market breathed a sigh of relief there. Did show relative weakness. So on balance, the Fed I think was given permission to lower interest rates. I think we were putting on the site that the odds of an interest rate cut in October are something like 70 or 80% now. On the dailies, of course, we did fractal out there. Beautiful empire. You can see how that fractal signal fired, and we're working our way lower here. Haven't really done any damage off of the weekly charts yet because, like I said, we just posted a new high. And you can see off the weekly basis, the most recent daily top produced this weekly fractal. We never did break down. And we painted an inside bar the following week and worked our way higher. So at best, we're going to, with the daily fractal working, my hunch is the beginning of next week will probably be relatively soft. And we're probably going to carve out, we might even carve out like an empire pattern here. But next week's candle will be sort of the tell off the weekly charts, whether we inside bar like this kind of scenario. Or fractal top like this kind of scenario to set up the next move. So as it stands right now, U.S. dollar index still pointing higher, and it will be at least a week and a half before we get any sort of weekly indications out of this. And as I said, just off the short term, with the weak U.S. econs, we had employment report come out today in the States. Wasn't necessarily weak. It did come in a little bit lower than expectations, but things like the headline unemployment rate dropped to like a 50-year low, so that's going to be received relatively positively. But at the same time too, the jobs numbers weren't really strong, so we can make the argument that the propensity for the Fed to raise interest rates anytime soon isn't there. And also to the average hourly earnings number in that employment report actually ticked down, which means that the inflationary pressures from wages aren't there. So with weak ISM data, I think it makes the case that the Fed can actually lower rates comfortably here. So again, sort of more reason why, okay, maybe risk will come back into the market if the Fed's thinking easier policy. And maybe we'll get sort of risk-on trades back working again, and people will pull their money out of T-bills and actually start to get it working in the market again. So with that said, obviously we had a big drubbing there midweek through the stock market, oil market. You've heard me talk at length about how I feel as though this market was highly manipulated. Interesting to see that the oil itself actually has come down and filled in gaps that I had made reference to tertiarily. Of course, I talked about this massive gap that needed filling in. But there were also these little cheeky gaps, right? There's one here at about 53 and change, and then there's also this cheeky gap down here at 52 and change. And interestingly enough, sometimes, keep in mind, Brian just sort of, is talking out of his butt here. And, when I do these reports, half the time I'm just sort of ad-libbing. It's not really like I'm working off a script. But I do see that I think we could have very easily made reference to this bearish AB equals CD target. And then, like I said, you also had a couple cheeky gaps down below here that could have been filled in. And in essence, that's what this price action is down in here, is basically validating AB equals CDs and filling in price gaps. We'll see how this goes. Only time will tell. But, considering that stocks are feeling a little bit more uppy here, trying to find some sort of bottom, you can see the doji on the crude from yesterday. Indecision day. Do we really want to press lower, or maybe we'll go back to risk on? You can actually see there's a couple gaps to the upside that could use filling. I guess that one's filled in, but there's a cheeky gap there, and there's also a gap there at 57. So we could actually see an environment where risk comes back on. Like I said, US dollar index looking toppy, and stocks catching a bit of a bid here. But the oil here, I'd really like to see some sort of fractal, maybe even if we're lucky, a nice W, to actually mark the bottom. On the other side of the equation, like I said, I'm constantly watching this on a daily basis. Risk on versus risk off. It's interesting to see that risk off are still catching a bid here through today with the little bit stronger employment report. So they're all moving up, and we did have a funny little algo buy signal come in on the bond market there the other day. So it doesn't surprise me to see these bonds working their way a bit higher here. So that's working away. I think this is really just a simple question of accepting back into value, which it clearly has. And if we do, then 80% of the time we should go up and tag value high. So I think that's basically the trade that's happening here right now. But, like we had sort of talked about recently, I was looking for counter trend rallies to think about potentially shorting these risk off proxies. With the recent stock market malaise, that's sort of given the risk off proxies a reason to get back up top. I've talked a little bit about how I'm not overly excited about being, certainly not, I can't be a buyer here of gold, and I might even think about shorting. And I noticed when I was looking at the rags this morning that things like platinum, they're starting to come off. And Palladium's kind of waffling around up here. And I suppose that's a good dovetail to the next chart that I had on here. I had this Palladium stock on the books that I bought this little double bottom off of down here. The technical target, the very simple knee-jerk technical target, should be 50% rules, WD Gann. Everybody just saw how Bitcoin did its classic 50% bounce. And we also had this cheeky little gap here at the close on this was 1949. And lastly, on this chart, and I think I have it over here, that 1961 was a it was a AB equals CD price objective. So there is that level, 1961. Now I had an odd lot of this. I picked up a half a board lot of this stock down at the bottom. And I had my order working at 1961, but because it was an odd lot, it did trade at 1961, and I was getting ready for the daily brief, and I was just like, I don't need to be a hero here. And I just let the position go at like 1956. So all in all, I'm okay with taking a profit in anywhere in this area, and it kind of looked to me like the market makers are kind of messing around with price. Could we see this thing spike up a bit more? Sure. But we did hit that AB equals CD objective. We did hit the 50% rule. Like I said, we did fill in this noticeable gap up top here. So I was happy just take my money and run. I sold half of the position, so I've got the other half still on the books. My cost basis on the other half is like $1, $2 a share, because it was just a little bit less than an outright double. So I'm perfectly fine just sitting here on the, to all intents and purposes, free position. It's not exactly free, but and I'll just let the rest of the position work. But I did, just FYI, I've been sort of talking about actually thinking about shorting these markets as they get up into their tops, into the metals. I decided to let that PDL go here, at least half of it today. So heading on over to the crypto arena. And what I did notice recently that sort of caught my attention here, and I think this is kind of like, Bitcoin dominance kind of conversation. Hopefully you see on this, and really these two conversations are sort of intertwined. But, we did that Coinigy show recently. Alex Sturck has turned up out of nowhere all of a sudden, getting rah-rah. Excited about doing Coinigy shows again. Dav and Coinigy people told you about all the development that they've been in. I'm feeling like this altcoin market is getting ready to base here. I think I've talked in these recent videos about Pluto, Saturn, supposed to be a big, cross and entering into chaos in the financial services industry. So, could crypto be getting ready for its next wave? If we look at like these three names here, I mean, first and foremost, are we at bottom ends of ranges? Are you walking into a trap here buying up markets? And clearly the answer is no. Then secondly, do we have signs of things, and, let's just do this BAT just for illustration purposes. Do we have signs of momentum divergence? Is price stronger than what price would lead you to believe? This happens to be a weekly chart, but if we look at like a daily chart, I'm starting to see signs of divergence, right? These indicators are actually painting higher lows versus the price painting lower lows. Was Willie stupid? Yeah. What I really like about this in here is look at this beautiful OBV bottom with a huge volume breakout. So the sad part about it for all the people that were technically little old ladies and that came in and bought reload zones, maybe you didn't get your double off, but really, if you just slowly are accumulating a position and it's less than 5% of your portfolio, I would have no problem with this just sitting on this kind of name and just doing nothing. For the traders out there, I actually really do like the fact that we got W's coming in here, higher highs and higher lows defines bull markets. And I sort of pointed this out through the daily brief today. Notice that if we do things like reload zones, 78.6 happens to line up perfectly with off of that double bottom, and reload zones, nice level right in there, nice tail. So I'm never really the type of guy who likes to chase markets, but I would definitely keep an eye on a name like this on any kind of dip back into the 1800 area. Take a serious look at it. A lot of, and this is actually, it looks to me like very, very much like we are finally starting to base out here. And there's a bunch of names that we reviewed in the daily brief today, thanks to our awesome site community. This engine, ENJ. Came, again, are you chasing an up market? Are you walking into a trap? No. Even if you started to accumulate at reload zones, which just eyeballing it looks to be somewhere in here, I don't really have a problem with people accumulating positions in this. And, this is the same sort of logic here. Don't really have a problem with you accumulating positions. Are you banging out doubles all through here? No, but this is where you're banging out doubles. So, that's the kind of market it is. This is, if anything, when I look at this, and I'll probably leave the video off at this for now, this is the type of market that looks sort of like this. There's really no wrong way to read this line, right? Some people will read this as opportunity is nowhere. Whoops, I forgot the last line. Other people will read this as opportunity is now here. I look at this, I don't really have a problem going and buying a little piece of names like this. You want to drill down and really hunt your setups, Mr. Traders and stuff? Well, I mean, you can see the wide W's that are trying to come in. You want to do crazy things like reload zones to try and sneak yourself in. You can see the market did dip into reload zone down here. And should we break out to new highs here, I would just do exactly the same thing. Wherever this high goes, you're just going to draw your reload zone tool, and in that zone you can be a buyer. So anyway, the point that I just wanted to make with today's sort of free video was that there are a number of names that are setting themselves up. So really, you just have to be patient. You have to define your plan. You have to define what type of risk taker you are, and then live with those results. And I think a lot of people that thought that they were little old ladies in this space, turns out they never were little old ladies to begin with. And if you can't handle sitting on a position underwater, then you're not a little old lady. And if you are taking greater than 1-2% like nibbles at a time, then you're not a little old lady. And really, if you fancy yourself a trader, then you have to identify these W's, buy the breakout of the W, and just simply risk to new lows. And if it breaks to new lows, you got to walk away. And that's the type of market that I see right now. I definitely think opportunity is now here. It's just really a question of your personal perspective. Okay, I think I'm going to leave the video at that. Have yourselves a great day, great weekend. We'll see what kind of traction we get for the broiler chicken show on Sunday. But have yourselves a great day. All the best, and bye for now.